Evening, traders. Yeah, no yoga. No yoga, Jenny. One day. One day soon, yeah? Well, look, we've got ourselves an open, right? We've got ourselves the sell-off that you're looking for last week when it was announced that Trump and the Republicans have pulled their healthcare bid plan. Then, I expected the market to be pretty heavy. It was actually surprisingly strong into the close, had a little bit of a bounce. But it definitely opened up as there seemed to be no move forward, straight on to say, tax cuts and the next plan from Trump, because there was some optimism perhaps that he will bounce back and move straight on to something he can pass. But the same sort of obstruction, the same sort of concern from that he can't control his own party still remains. Now, straight up, the US dollar's been under pressure. Look, it's already moved a fair bit in Asia. Now, the problem about tracking Asian moves is that Asian moves on Monday are not the best and most reliable moves that you can have at the start of a week. Okay, just historically, they're quite dubious in setting the direction. So maybe it's the Europeans don't like to be told by the Asians what's going to happen, but it's I don't know. It just happens too much that the big moves to me aren't usually kicked off by the Asians. So I'm just a little bit wary about the initial direction set here. Look, I believe it. It just doesn't mean there won't be intraday volatility. All right, so I've been scaling out of my long euro trades. I'll be scaling back in on a dip back down towards 108.30, 108. And same with dollar yen. I don't think dollar yen's going to get past 111. But the first move down to 110, you expect to be pretty solid support down here, just from the big figure, just from those who have been thinking in the back of their head, I want to buy at 110 if we get a chance. I snap straight through 110 and back towards 109 on the euro without pause would be probably an outside chance today. But you never know. I mean, at the height of the weakness here at the start of the European session, the US futures down 150 points, which is getting there, right? It's getting there for the US stocks. It's past 200, we can really start to look at some more slippery moves in FX. But taking the gauge from, say, the Aussie dollar, it's not yet suitably impressed, right? Suitably motivated to make that next leg lower. And you're going to need a bit to get dollar yen below 110. Now, US yields have been dropping during the Asia session. 10 years down to 2.36. Starting to show some signs that the rally is over. And what this has is that this market's been heavily speculated in. So bonds have been shorted, which means the yields are going up. Now, if yields are going down, then bonds are going up, and those shorts are getting squeezed at the moment. If you look at the previous low, it's not too much further away here. 2.32, a break below that would signal more substantial downside and probably more substantial dollar yen downside, because it's the most sensitive to this particular chart. So yeah, look, over time I think we are going down, but it's just not right now. I mean, just be patient, right, and look for opportunities to sell again, look for opportunities to buy euro again. So that's the main message here. It's very hard actually to be selling stocks in the last couple of years, and I'm pretty sure those shorters remember that. It's without a specific motivation, just general angst about Trump. It can turn out to be negative, but you might need continued catalysts of the same story, if that makes sense. So let Trump start fighting internally with the Republicans. That would add to this. He did a little tweet over the weekend that was taken as a bit snarky towards the Republicans, and I don't think that helped in the open today. So yeah, look, it's definitely an interesting market. The volatility is going to be there this week. You're going to get some nice moves, and I'm really looking forward to this week. There's no real data out. It's mostly all It's mostly, you know, Article 50 on Wednesday for the UK, huge for the UK, and just this general stock market risk off sort of flow, seeing how far it's going to go, and if it's got legs to break some of these uptrends or just corrections. I mean, just corrections really aren't going to change the whole story too much. Dollar yen's weakness is starting to get more substantial than a correction, and it's you know, we're getting into serious sort of sell-off here. But my main message, if I want to get across to anyone, is I think this is going to be a slow burn, not a fast burn. And yeah, so to temper your expectations. Right, those who have been buying euro with me are probably frustrated, and I had a problem with a few clients last week. They've been buying euro and, you know, understood the trade, right? But we're like, well, you know, we've been up here for the whole week. Why are we not breaking 108? And they got impatient and closed out when the market came back up to, you know, sort of 108 again. And now they're sitting here saying, oh, I can't rebuy, it's too high. You know what I mean? Like, this is just the speed at which the euro is moving. It's not anything else that you have to be concerned about. You just have to say, if it's going to 110, it might take 2 weeks, not 2 days. So yeah, just tempering your expectations is important, I believe. You know, back in the day, this move in dollar yen that's taken, you know, this daily candle, right, quite a large move for those on the ground, but just tiny for those who remember how fast dollar yen can move. Maybe a move below 110 will accelerate things, but you know, that let's just see if that happens and when that happens and how that happens before we get too excited. Now, in terms of the pound, you know, I've been bullish on the pound, and the whole trade is that the short's going to get squeezed after we get some progress, and the next bit of progress is actually the triggering of Article 50. I'm really interested to see the price action on Wednesday, right? If the market ends up higher, I do believe that the short squeezes will be continuing up to at least 127, maybe 130, and that doesn't really phase the sellers who are, you know, probably looking for the market to roll over at some point. So just looking at this as a new opportunity to sell higher, as they expect negotiations to get more serious in coming months, and, you know, be negative basically. But you know, there is a chance that these things don't go as badly as first thought, and price action and momentum can take a market much further than and positioning can take a market much further than you'd expect. So if you're sitting here waiting to sell this, you know, just be careful, right? I mean, probably wait for some sort of signs that the market's turning over, because you don't want to be selling at 130 when we're at 134 or 138, which you can do without really too much effort at all. The pound is notoriously aggressive when it starts to move, and it's it could just be straight up just taking advantage of the US dollar weakness, or it could be just straight up the recovery trade shorts getting squeezed for longer than you'd expect, or just a little bit of good news. Yeah, so just be open-minded to the fact that the pound is at really distressed levels, and a chance of a big rally will become more apparent if the squeeze happens, and that it could morph quite aggressively into that bigger rally, and you know, you don't want to be dogmatically short. If you're short still right now, you've got some issues, right? This stuff could blow up your account, so just be careful. The pound does not have to go down post Brexit. Article 50 definitely doesn't have to go down. You know, the number of clients are saying, you know, we're going to fall after Article 50. I'm going to sell now because it's high, and we'll go down after Article 50. Okay, you know, last time, this is the last time she spoke. Yeah, that was one of the biggest rallies in the last 5 years on the pound. That was a 500 point rally in the day. Don't be so, you know, strong in your beliefs. And that's when she announced a hard Brexit. So she comes out swinging again. Yeah, it's probably not going to be as dramatically higher, but you know, her tone, if it's a little conciliatory, could definitely be help the market rally. You know, if she comes out aggressive, it doesn't automatically mean that the market's going to sell off. Especially if you know, if there's a perception out there that it will go down. It's one of those days, right? I mean, if the pound wasn't in Brexit and the euro was doing its thing, then the pound would be a lot stronger just generally against the US dollar, given what's happened in the US dollar market in the last 2 weeks. So the pound's definitely underperforming even on that basis, right? And so we do have that potential other side of the story, which is the US dollar. So I've said my piece on that. I'm actually looking for the long side, not the short side. I suspect it's got some room to move here, and the squeeze is, unless she really muddles up, I think the market's squeezy ready right now. Yeah, the talking about interest rates will continue in the background for the next 6 months probably. That's another reason that the pound's going to be so hard to read, and the shorts have got that extra bit of issue. You know, if inflation remains strong, and it's now another month until we get that next month's inflation, but then you will see that talk continue. I doubt the BOE is going to move too quickly, and we have to wait for the next Bank of England meeting. But it's, you know, you only had one member talking about raising rates last month. You're going to have to convince a fair few very quickly. But you're in this scenario where if the pound or if the economy remains robust and there's no dramatic downside or dramatic negative effect after the big recession doesn't come, then yeah, they'll normalize more quickly, and the pound's rally that will be happening from the data remaining robust is where you'll see that overextension. Like traders asking, well, what's the top side? What's the best case scenario here for the pound? 150. 150 without this year. It's not even like, we're not joking around here. This could easily move past 130, keep on going, and then economy doing well, inflation around the world picks up, they're raising rates, pound's just not coming back down. You know, good faith agreements with the EU or delayed agreements that might, you know, extend past the next 2 years after the UK's left the Eurozone. I mean, there is good case scenarios here. If it wasn't for a Brexit, it would be at 160, 170, probably. Yeah, I mean, without Brexit and the economy doing well. So it's these are all-time lows in the pound. So talking 150 this year in a good case scenario is not that crazy. This sort of stuff can definitely happen. Let's look at the yearly. Yeah. So definitely got some room to move. I'm not that bullish. I'm just, this particular rally I'm looking for 130, but it's I can see the way that the market evolves into something better, something bigger. You know, that in that same world, euro goes to 120, and the Fed raises one more time only this year. So it's not an easy scenario to envisage, but if we're talking pound to past 140. But we will follow this trend, and we will keep on, you know, trading the trends as they develop. And because we're day trading, we care about the next week. We don't care too much about you know, long-term forecasting. We're going to win each battle each day. So the short-term forecast is that the euro's broken, right? The euro's broken that key resistance, gapped higher. Now, interesting little point here. A few traders came and asked me today, well, you know, are we selling this gap? Euro's going to, you know, close the gap. I like to sell these gaps. I'm like, well, this is a pretty strong gap, right? This is gapped above key resistance, right? Choose your gaps that you trade. You don't want to be closing a gap when the market breaks, you know, double top resistance on a Monday morning. That's just crazy stuff. You're asking for trouble. Yeah, I mean, I was happy if the market did pull back to buy on that dip, but if it didn't, you know, if I'm short, I mean, it just is a really low probability, I think, sort of sell if you sold at the open this morning on this gapping theory. You know, you don't just sell every gap. You know, this is definitely enough of a reason to not sell here is that the market technically broke a key level. It's you've got to pick your battles, and that was not the time. So yeah, Euro's so strong now just on the charts. Its immediate target is 110, and I do believe it will probably be testing that this week. But we will be, you know, into the big data week next week, where the NFP and everything comes back into play, and that's where the US dollar bulls make their comeback. Right, we had super strong NFP last month. You know, if the NFP comes in, then all of a sudden people aren't talking about the Fed being dovish; they're talking about Fed being behind the curve, and they're not talking about, you know, Trump. They're talking about the strong US dollar, US economy. So the market can shift its rhetoric, its story very quickly. And so this week is probably a good week for the markets to try and push higher. Next week, just settle down a little bit, running into the NFP. And definitely, if the dollar yen is under 110 going into next week, into an NFP number, with has that ability to shift the focus back to the US economy, and perhaps the Fed not being with the curve, then you know, it will offer really good risk reward to the long side, because the dollar yen's most sensitive to that change, to that snapback. So there's some really, you know, interesting trades coming up, not just this week but next week, if the US dollar does want to overextend. In terms of the US dollar index, yeah, that 120 call is a bit of an outsider. Gotta get your name out there somehow. Dollar index has broken previous support. It's hard to say, right? Hard to say where we're going to go from here. I mean, basically, you're just looking for the US dollar to base. I'll just be looking at the dollar yen and the euro as the two to play it. I won't be playing this off any sort of previous levels. I'll just be looking for the US dollar itself to turn. And I suspect, you know, like we said at the start of this update, that this is not going to be an aggressive market, just slow burn lower, with bouts of reversal. If you're coming in to say, you know, what am I going to be watching today? What's the most important thing to watch today to see if these trades are going to be reversed? It's probably US equities. If you see US equities back above 2600 or back above 2650 today, yeah, it's going to be very hard to remain dovish on dollar yen tomorrow. Yeah, in this scenario that we're talking about, gold does go significantly higher. Yeah, you're right, probably 1400, yeah. But that would require stock market weakness or geopolitical risk. But that's possible, right? That's definitely possible. We've got ourselves some interesting characters in charge of the world at the moment. Alright, let's have a look at some of the data out there. And get back to the day trade, day ahead. Got some Barclays week ahead. Alright, so everyone's US dollar bear now. Cases for modest US dollar appreciation peaking over the next 12 months. Trump's facing challenges. Preliminary CPI for March from the Eurozone. March Chinese PMIs, they're very important too. They recommend trading short dollar yen this week. Pound is set to outperform in terms of forecasts are greatest conviction lines in the fourth. Oh wow, okay, these guys are my friends. We expect the triggering of the Article 50 to initiate a rebound in the pound from historical undervaluation as ambiguity over Brexit recedes. Markets have overestimated downside to GDP, but a confluence of factors positioning, corporate hedging, risk to monetary policy, Bank of England rising, should accelerate the rebound. We expect Euro pound to reach 76 and the pound to reach 138. Ooh, our good old friend the Euro pound, how are we travelling? Bit of push-pull against the Euro. The Euro is doing quite well as well. Not the cleanest way. But definitely there's some selling the rally sort of action going on there. 138, 76, that's big calls. I expect dollar yen to go to 106. Okay. It's also pretty big. Right, so US dollar's main downside risk is Trump's policy agenda gets challenged. In our view, the current administration is spending more political capital than initially assumed, limiting the likelihood of an aggressive implementation of the original agenda. Building the Mexican wall, big tax cuts for corporations, deportations. I mean, Jesus, the amount of flack he got for his visa ban, I mean, that's still ongoing. Alright, the falling political risk in the Eurozone, that's still true. Over the weekend you saw the key little by-election in the German situation, see Merkel win again. And so there was concern about Merkel and the upcoming German elections later, early next year, later this year. But it seems like she's consolidating, rebounding. Yeah, the Aussie's really in a tough case. The Aussie, the US dollar is weak, right? But the Aussie can't strengthen at the moment with this not just stock market pullback, but also commodity market pullback. Iron ore's movement over the last week has been very aggressive to the downside, and so perhaps if we get some stabilization out of China, the data this week might take on a little bit more importance. I mean, the data's been pretty strong out of China. The PMIs, anyway, have been increasing. But a very common trade now is Euro Aussie and Euro Kiwi, Pound Aussie, Pound Kiwi. Those are very technically strong, and people are hopping onto those, and that doesn't help, right? You're not getting any support from the crosses. So Euro Aussie's strengthening, and Aussie Yen is getting wrecked. Aussie Kiwi in this environment does badly as well. So Aussie's getting hit in nearly every cross. It's very hard for it to even give its head above water. It's doing well just to remain above 76. But it's a little battler, so we'll see. I mean, there was periods of time in the last 2 months where Aussie dollar were the strongest pair, right? So it's okay for it to have a couple of weeks of uncertainty and a little bit of pressure, but don't forget that the Aussie for a very long time here was the go-to currency to fight the US dollar. So it does have friends out there still. It's just not right now. It's too many enemies, too many people, too many crosses on the technical break high. Look, I said I was going to talk about the Euro Aussie. The Pound Aussie is more pronounced. I mean, that long-term downtrend's under pressure here. Well, let's just quickly check the technicals on the daily charts. Technically, everyone should be on the same page now. Yep, so the buying at 108, stop at 107.60. We've got the 200-day moving average coming up at 108.74. Where did we get to this morning? $108.74. Alright, we gotta get past that. That'll be its own little challenge. Dollar yen. Jesus, we're just searching for support here. The 50% retracement, of course, comes into view. 108.84. I mean, I don't mind 108.10. I don't mind, you know, buying dollar yen on an extended drop lower. We've got the 200-day moving average coming in where 108.24. So anywhere below 109 makes sense tactically to me. I mean, those levels, doesn't take much for the market to switch back to US dollar strength, or Fed raising rates maybe quicker, or a hawkish Fed speaker. Then we're getting pretty extended, right? It's it gets to be value at some point here. You know, especially these crosses, right? We got pound yen and euro yen just wanting to rally and getting held back by the dollar yen, and it's yeah, pound yen in particular, right? The risk reward to the top side is becoming more and more. You know, the risk off sort of trading that's keeping the pound yen down. If the pound wants to rally, pound yen rallies. You know, that's just a, you know, part of the game. So there could be this scenario where stocks stop falling and go sideways. There'll be a perfect environment where the pound and the euro can rally on the Fed policy being delayed, or the Trump policy being delayed, and the stock market's not reacting, but dollar yen starts to grind higher as the yen crosses overwhelm and drag it higher. And I suspect that's a higher chance than people are expecting. And so dollar yen is that's a really rare occurrence though, right? Usually you don't get dollar yen going sideways or the same direction as euro and pound, but at these sort of levels, euro yen and pound yen, you know, the only way they're going higher is if the dollar yen helps out a little bit, and that's or at least stops falling. And I think that's a really strong chance as one of the outcomes in the next couple of months. So I mean, we'll come back to that if that eventuality begins. By no means have we seen that happen. At the moment, euro goes up, dollar yen goes down. All right, if we start to see euro going up, pound going up, and dollar yen not going down, then we have to check how those crosses are rebounding, and if they can technically break higher, then we can start to think about this as being a tradable sort of move. At the moment, you're fighting sort of gravity at the, you know, you're asking for trouble by buying the pound yen, euro yen. But it's, what I'm saying is there is ways it can happen. Don't just always assume dollar yen is going to be correlated with the other two. Just mostly is. And this is the way I trade, you know, correlations and, you know, changes in correlations of creating opportunities is a very important part of me looking for trade, medium-term trades anyway. Alright, Aussie's holding. They're staying long above 75.90. Wow, that's ballsy. Kiwi remaining stubbornly strong too, above 70. I mean, the Kiwi, if it's not going lower, is going higher. That's its general MO. So it's got its ability to rally, and it bounced off 70. Yeah, risk has got to remain fairly constantly off for Kiwi dollar to remain under pressure. This is not looking too bad for the longs. Yeah. Dollar CAD continues to trade sideways in an erratic range. It's really hard to trade the CAD and the Aussie dollar right now. It's just no need as well. It's just very, you know, you don't want to start picking fights in the market where there's so much uncertainty. There's a big chop fest going on there in the 133, 134. We'll keep an eye on this 85.66 in coming days. If the euro goes, you know, if the pound pops higher after the Article 50, then we'll keep an eye on this 200 on the. Let's whack that in. All right, guys. Yeah, I don't want to go on and on. I will be back tomorrow at 9 GMT. Keep an eye on your clocks. There's been a lot of daylight savings changes. Next week there's another daylight saving change for me here in Australia, but over the weekend there's been changes in Europe. So all you Europeans, just note that I didn't change the time I started. You guys, your clocks changed, yeah. So 9 GMT is the time that I'm pretty much going to try and stick to, no matter what is going on with the daylight savings around the world. And so 9 GMT, just keep an eye on that. Any questions, just send me a PM, or if you want me to look at a particular pair, we can have a look at it. This week is a good week to be looking at crosses because there's not as much data, so there's a bit more time for us to go digging into some of these other pairs, not just on the majors. And because there's so many cross currents going on, the crosses actually might be a safer way to play if the US dollar gets overextended. And it's not too far away from that, especially with the dollar. Alright, thanks guys.